Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, how do options compare with stocks in day trading? Answer by Peter Fiorito. If you think options, you should think strategy attached to it. What I mean by this is that options, because of their time-tied characteristics, should always be traded as part of an overall strategy. If you are just buying options because they are cheaper and more volatile, you are going to have a bad time at this. You should do some research in option-based strategies and understand the math around it. I would say that the main advantage of options is that you can trade volatility itself by creating a synthetic position, and as long as the price moves to one direction and doesn't hit the strike price of any of your options, make a profit. Having said that, trading options strategies is difficult, time-demanding, and can bring you a lot of stress if things don't go your way. Experience and quick rearrange of the strategy are constantly needed. Certainly not for the faint of heart or inexperienced traders. Hope that helped you. Have a great day. Answer by Bob Berker. On the surface, options are derivatives, so in terms of price, they track the underlying. Unfortunately, they're not that simple because their inherent value changes at varying rates. Each option has its own delta. They incur time decay and their value can fluctuate as implied volatility fluctuates. Day trading comparison? Options are cheaper and provide leverage. If you use ATM options, then delta is 50, so you'll need 2 to duplicate the initial move in the underlying. If 25 delta, then it's 4 options. Option spreads tend to be wider, so the increased number of options needed means that you need a larger move to break even. There's a lot of math involved in understanding options, so there's a bit of effort needed to understand their behavior. And then there's that issue of getting the timing and direction right. There are conservative uses of options, but that's not what you asked about. Answer by Robbie Rockade. Very risky. People starts with future, then cause of loss and less fun they trade cash segment. Then again after losing choose options. OTM options becomes what people need to review as strategy.